Before investing in anything, do your research. When it comes to cryptos, there's a lot of information out there on what they are and how you can buy them. But what could you be doing as a newbie investor in the market with absolutely no strategy on the best way to sell these assets down the road? Well, that's where things get interesting. This video is sponsored by EnergyDefi.com. Energy is the future of decentralized finance. For more information, visit EnergyDefi.com. As the name suggests, an exit strategy is the best way to ensure you leave with as much profit as possible. In this case of cryptos, it's all about making sure that your sell-offs leaves nothing on the table and taking advantages. But at the same time, there's still profits left in the market. But why is an exit strategy so important? Situations always don't go in your favor. For example, investing in the stock market is risky. Likewise, trading a collectible for too long may result in losses when you decide to sell it. The same thing happens with cryptos. Also, the values of both assets fluctuate all over. For instance, December turned out to be an unlucky month for investors. The sudden increase in value initially made the investors believe that the trend would continue next month. But unfortunately, it got a downfall and all the investments ended up in a loss. That is why a good crypto exit strategy is important to guide you when you leave the market with profit. Analyze the market. While you're planning your exit strategy, make sure to observe what's going on these digital waters keenly. Recording how different coins behave when they hit certain milestones or price levels can help predict the prospects. Of course, the best thing to do when you don't know how to analyze your market is to ask others for help. Usual standards don't recommend it, but in this case, I believe that it'll be worth the risk. Have a price target. It's the most common exit strategy for investors. Target a price range and then sell your assets when they reach the level of value in an attempt to make profits of them, before they can realize that there's no need for this product anymore, thanks to competitions from all the other similar products in the marketplace. This technique may not be perfect since prices change constantly, but it's still worth using as long as you know what sets your expiring investments apart. Dollar cost averaging technique. Dollar cost averaging is a great way to ensure that you invest in the market without any significant risks. The investors would buy an amount within regular intervals, providing peace of mind for those who may be nervous about trading with their money right off the bat. This strategy is a great way to make sure that you never run out of cash. You're going to sell your investments at regular intervals, and by doing so, it will always bring in profit for the investor who purchased them from the original owner. This process may seem simple, but can assure significant returns on investments. Follow Bitcoin's cycle. Bitcoin is the king of cryptos. I mean, when it goes up, so do the other coins. No exception will be made in this trend, and if you're trading with any other coins than Bitcoin, keep an eye on the trends for clues as to what might happen next. For example, you will see that the market trend gives us a sign to sell our assets. It would be best whether it's time to sell or not at this point and see how many buyers will be interested. Use stop loss strategy. The stop loss strategy helps you to avoid significant losses. This strategy works by selling an exit price for your investment. Then, when they go down too far, it will keep them from sinking with the market's volatility, avoiding losing money on both ends. Thus, the name suggests that it can be used as a protection when things get rough. Still, in reality, an investor should use this method because it always gives better results than emotion-driven decisions. Think about reinvesting. People often invest at one project at a time. It's a mistake. It can lower returns than expected. People can even suffer losses for this investment strategy. However, you can gain these profits before letting them go another day by spreading your investments across different projects. We hope that you know that an investment strategy is as important as the investment plan. You should be able to get your profit in hand and use it wisely for further investments. Creating a perfect exit strategy will have your profits at arm's length. That's all guys. If you liked our video, please subscribe, like and share and hit the notification bell. This video was sponsored by EnergyDefi.com. EnergyDefi is the future of decentralized finance, a one-of-a-kind distributed business building platform that enables the creation of decentralized apps, dApps. EnergyDefi leverages the power of its financial technologies with an incentivized network community. For more information, visit EnergyDefi.com. Thanks for watching.